Hey, and welcome back to Alpha Commission. Just wanted to fill you in on some things that we've been talking about over here. The market has been pretty down these days, so personally, I've been staying out of a lot of trades. I know a lot of you have been staying out of a lot of trades, and that's probably smart. I mean, Tether is king right now. If you had gotten out when we were discussing it back at $62,000 Bitcoin, and no later than the $59,000 Bitcoin that we kind of set as a threshold. If we got under there, maybe it's time to get out, you know? Well, a lot of you stayed in the market, and your portfolios might be hurting, and you might be reluctant to trade, or you know, even you might be leaving the crypto market entirely, licking your wounds. But I wanted to show you that there are, a couple trades that are still out there. And one of the coins that we've talked about a lot here at the Alpha Commission is CPOOL. We had the interview with the CEO, and it's a great project. I mean, that's a separate issue than trading. When you're trading something, you have to trade the chart. You don't trade whether or not you believe in the project. Maybe you can do that for investing, but you don't trade based upon, just that you like something. Uh, if you have a falling knife structure, you probably don't want to be longing that, right? So these are the type of discussions that we're having over at Alpha Commission. And, if you do look at this chart, you may notice that it has huge pumps. It has huge pumps whenever it gets to little reactive areas. And here it had a pretty good reaction, and it had a nice 87% pump, right? If you were able to catch that. But again, this was a falling knife. So, would you want to stay in this trade? It didn't have to pop out there. It could have just kept going with the rest of the market. But it does seem to be catching support. And, this 61 cent area, this, approximately 45-cent area, and then this 31-cent area. And, I think we just saw the price fall in these downward channels that it's been carving out. Here you can see this main channel here, this in teal. You can see this main channel here in red. You can see some smaller channels in like an orange here. This thing just loves to fall. It hits the top of its channel and then it falls all the way back down, right? Here, I think we're in this price reactive area. We're above the mid channel of this red descending channel, and people are thinking like this might be a good value zone. This might be a good value zone for trade because this thing pumps even here 33%, right? So you look at these type of opportunities and you say, hey, look, this is bouncing, off of this reactive area. It had a nice bounce here, and maybe it's going to at least go to the top of its channel. And if it busts out of that channel, that might be even a better bullish sign. But right now it looks like we're getting rejected, and it might be doing more of the same. Uh, One thing that I've found is that this has a little bit of a fractal going on here. Boom, reactive area, bounce to the top of a channel, kind of skirt it a bit, and then fall down. Bounce to a reactive area, boom, skirt it, and then fall back down. Caught support here, but you see up above the mid channel and then down, up above the mid channel. Right. And then we might expect that it comes down again to 45 cents or maybe 31 cents. And those may be places that you might be interested in to try to catch these little moves. As we get compressed against this support, the moves are getting smaller and smaller. So this was 87%, and now we're down to 33%. Obviously, as this channel descends, that move is going to be smaller. It might break down. So if you bought here, you might actually lose money. And so I'm personally not interested unless we catch this bottom, because then that could be maybe 20% or more. Or if we break out here and see something different. One thing that the market may be responding to with this pump is, and maybe a little bit more hopefulness, is that this does appear to be rounding. We're not, if this was a semicircle, we're not at the bottom yet. It might just be curving a little bit. The bottom, this could go sideways a bit, crab a bit, maybe double bottom, something like that, maybe even triple bottom. The worst case situation would be that it loses this 31 cents and then it breaks down, and there's nothing supporting it below 31 cents. So it's going to be in price discovery mode, to the downside. And that could look like this, but down. So, obviously you're not going to go to negative 60 cents, but, we have price action here as low as 5 cents. So, obviously that's the risk that you're playing. But we did break this macro downtrend on the linear chart where we popped up above this trend. If we make a trend out of these 2 points, these 2 high points, popped up, almost perfectly retested it. And that would have been a great spot to buy, right on that reactive zone, right on that retest, and you could catch that move and then sell directly at the top of the channel. That would have been a great trade. So my point here is, even with these, crazy falling knife charts, if you have some type of logic, if you can build some type of logic into the chart, and it doesn't have to be the most advanced, technical analysis or anything like that. You guys may know that I'm a learner along with you. Here at Alpha Commission, we're learners supporting other learners as we learn together, right? And we share what we've learned. And these are just the tips and tricks that I've learned as I've interacted with you guys. But you can make money even in a down market if you're very careful. Personally, I wouldn't recommend trying to catch a falling knife to any newbies. I would say if you have higher lows being formed, then maybe you can play that off. You had a higher low here, so that's better. That's better than trying to catch one of these trades. This is very risky, but higher low, higher low. The trend broke, okay. Higher low, higher low. Is it going to go again? Well, I don't know. We have lower highs. Lower high, lower high. So this is a very neutral pattern here. Nothing to write home about. But it's better than if you just have lower highs and lower lows, right? But for new guys, this may be a little bit risky because, again, you do have that chance of getting into a price discovery mode to the downside. If we put on log scale chart really tries to capture the parabolic movement of something. So all these lines get distorted. So just ignore all these lines. Let's just make a new macro trend on this. You see here, we haven't broken this trend yet. Here was our high point, here was our high point. We drew a line between them, and look, it bounced off here, almost exactly. So there's a lot of confluence that this thing hasn't broken out of its log resistance, its macro log resistance. Even if it did break out, because the log's off, even if it did break out of this macro resistance on the linear scale, the log scale is still saying, let's get above this red channel here. So if we do see prices above 65 cents, we could say, okay, maybe this thing is rounding out. maybe there's a chance that this thing's getting bullish again. And that's probably going to correspond with a Bitcoin, pumping or something like that. So yeah, this one has big moves. There could be a big move off of this 61 cent area. If Bitcoin gets really bullish and we're able to catch above this 61 cent zone, you could potentially see a big move here, right? Like this 87% move. These were big moves. That'd be something to watch out for. But as long as Bitcoin itself is underneath its own macro trend, and Bitcoin is in a downtrend, right? You can see these type of areas. It has some fake outs. This is the CME chart. But basically, it has these fake outs. Here's the log scale of it. Little poking out. But look, we're well under it. We're not even in the fake out zone yet. So until Bitcoin shows some bullishness, here's a higher low, maybe another higher low, start, get above this area, maybe 43K, 44K, hold that area so that we can recapture the prior high. Then I wouldn't be too interested in trying to catch the falling knife charts because Bitcoin itself is a falling knife and it's leading all the other coins. So if a coin isn't going sideways or up, then I don't know why you would want to catch it unless you're applying some really strict logic and you're very careful about where you're buying in and you understand that just as this thing pumped 33%, it can fall 33%. It can fall 15%. It doesn't have to stay up there. So if you chase that green candle, if you chase the pump, you can get wrecked if you're not, setting your resistance and support lines. And if you don't understand where the limitation on this chart may be. I'm not sure if CPOOL is using a log chart or if it's using a linear chart. They both seem to work pretty well. But, the log chart is saying we need to get above, 65 cents in order to start even looking slightly bullish, breaking that downtrend. And the linear chart is saying, you need to get above 65 cents to break this red local downtrend. All right, we broke the macro, but we didn't break this local one yet. So even if you break these macro trends, you could still be in a downtrend. You could still come back and try to double bottom or potentially get into price discovery to the downside. So just be careful when you're taking your trades. It is possible to make some money. Don't invest, more than you can afford to lose or that you're willing to hold for 2 years because bear markets can last for 2 years. And then also be aware that the reason why a lot of money is fleeing these altcoins is because a lot of these projects won't be around if a bear market lasts for like 6 months, 9 months, a year. In some cases, 2 years of just sideways action. There just might not be enough in it for the dev team or the project, to keep going. They may have already cashed out here or here or here on any of these pumps because they're smart money, right? They know what's going on. They know their chart better than anyone else. So if they're holding anything, they probably got out as much as they could. There may be unreleased tokens. There may be tokenomics that you want to look at. And again, I'm not talking about CPOOL specifically. I'm talking about altcoins in general. But they may be cashed out. And some of these projects, the devs and the VCs, they're all cashed out already. They took all the money out of the project already. And they really don't have, much to stick around for. So, watch out for that. A lot of these projects, if we have an extended bear market, will just die. And you can see that in the pre-2018 coins. Like how many of them are really around? How many of them really pumped, this cycle? Not as many as you'd like. So, you know, in 1 or 2 years, there are going to be a whole lot of new projects that are very exciting. And CPOOL is one of the newer projects, right? This is a very short history. It just came out in November, right? So at least on KuCoin. And so this is a new project. You can check out the interview that we did. We believe this is one that could endure this bear market, you know. But where do you want to buy? Where do you want to hold? Um, if Bitcoin really breaks down, could this break down even further? So do you want to buy when it looks bullish or do you want to buy when it's a falling knife? Right? And if you're going to buy, are you going to be willing to hold it for up to 2 years or are you going to, get scared as soon as it reacts to these resistance levels and sell at a loss, maybe, chasing a FOMO and then selling it at a loss? Well, for me, I'm interested in this 30 area. If it gets a bounce, if we extend this trend and it breaks down below 30 and it gets a little bounce, in this 20 area, then maybe I'll catch it also. Because I think if it gets above the 30, it could have some reaction. And above this 60, the 61, 63 area, if it can hold this area, potentially it can have a little bounce. Right, could be another 80% move. Or it could be nothing. It could fizzle out. Right? That's the nature of the market right now. It's a down market. It's not an up market. But I just wanted to give you a little update on CPOOL's chart. This really wasn't to comment on CPOOL itself. The chart doesn't reflect the value of the project or how good the team is or, its durability. It's literally just how you're making money right now, right? What the value is right now, how scared the market is right now. You know, are they unlocking tokens? The staking period, the rewards, all of this stuff goes into, can bring a price down. It doesn't mean it's a bad project, right? And also devs should be able to cash out. If you worked on a project, you should be able to make profit on it. You should be able to live, right, and pay your bills. It's not evil, for a team to sell some tokens. And I'm not saying that's what CPOOL is doing. Again, I'm just talking about altcoins in general. But for these type of patterns, you know, personally, I would rather wait to see them going sideways or having uptrends that are breaking their macro resistances and starting to look a little bit bullish. I'd rather buy an uptrend if I'm going to go long than I would, buying at the bottom of a chart that could drop to price discovery to the downside. And then that could be a huge, just like this was a huge move up during price discovery, it could be a huge move down, right? So, yeah, these are just some conversations that we're having over here at Alpha Commission, and we'd love to have you join us. And if you disagree, or if you agree, if you guys want to, show us your techniques or what you're interested in, then go ahead and follow the link at the bottom of this video or in the description, and we'll be there, during this bear market. Whether it lasts a month or whether it lasts a year, we'll be around. And we're looking for smart people who want to have these discussions and want to take advantage of the best prices you'll probably see in the next 5 years if this market is extended. A lot of people are going to get very rich buying at the bottom of it. And a lot of people are going to get very hurt, buying in at too high of prices, you know. So, see you there.